Welcome back, and joining me for a closer look at what's played out on the market scene today is Cobus Potgieter from Southern Cross Capital. Thank you so much for your time, Cobus. I was looking at the markets, the JSE and also the Rand, and they seem to be on solid footing, even though we do have an escalation of trade tensions, with Trump saying yesterday that he will be imposing a 25% import tariff on steel and aluminium. I don't know, the fact that markets aren't really reacting that badly today, are markets in a state of acceptance at this point?
State of acceptance, or just badgered beyond beyond having any remaining emotional reaction. I mean, honestly, overnight in the illiquid markets, of course, the currency does trade 24 hours, right? We did see initial reaction and substantial weakness, which quickly came back and throughout the day ultimately was almost entirely shrugged off by the market. That goes for locally and globally. And to some extent, I think the market is starting to expect some profound pronunciation from the president over every weekend, which is ultimately, shocked and absorbed. And it seems like a lot of these things are proclaimed without giving a solid timeline or sort of indicative details. And even these tariffs have not been imposed yet. No executive order has been signed. And even the ones that were sort of withheld at the last second. So the market is having trouble distinguishing between what's a negotiating gambit and what is actual policy.
Yeah. Well, talking about profound, there's really just this intensity between communication between South Africa and the US. Of course, talking about these executive orders, you know that he has signed one where he has basically said that Afrikaners can now get refugee slots in the US. Just talk to me about, are markets even thinking of this, that it could affect trade in any way? I mean, we've already had the sanction of aid where that could expand in terms of how we conduct business with the US.
Look, I'm busy packing my bags, but I'm still trying to figure out if refugee status allows me access as a tourist. Can I get refugee status and then leave again a week later? And who pays for my flight? But in any case, look, our ambassador, I can't. His words were so well structured and thought out, and ultimately demonstrating that we are not that special. And this guy's picking fights all over the globe. And frankly, calm heads need to persevere here. And now's the time to engage constructively. And the media locally quite sweetly reported that Cyril Ramaphosa, during his address, was standing firm against Trump's bullying tactics. But this is nonsense. This is just political posturing. We need to sort of wade through what's being said and accept that the sort of venom is going to be coming our way, and not just our way, the rest of the globe. Because this guy's effectively campaigned on an anti-rest of the world platform. To win this presidency. So it is isolationist by nature. We shouldn't take it personally, and we should just remain calm and keep engaging with calm heads, calm demeanors with the US government, and look for the most positive outcome here.
And really, just the political authorities that have spoken, that we've also spoken to also here on the show, actually seem very calm, quite a different picture than we are seeing on the ground. So you are right. I guess everybody at this stage just knows that this is political chess and they just need to play the game calmly. Well, let's take a look at some of the company news that came out with numbers today. Telkom coming out with its third quarter trading update. Group revenue up slightly 0.9%, but saying that was in line with guidance. But actually just saying, actually also quite interested in looking at that their mobile service revenue actually outperformed the South African market. Also the fact that their core profit also beat their guidance. Is this just another update that is cementing Telkom's growth trajectory?
Well, I'd say the share price reaction says it was more than cementing,
Yeah.
and I mean, honestly, yes, in line with guidance, but worse than analyst expectations in terms of that top line number,
Yeah,
which means the
okay.
traditional operation has sucked gas a little bit more than expected, but that operating profit margin expansion is absolutely enormous. This is only for a single period, and it's only a trading update. It's not a statement nor a set of results. So
Okay.
we need more color. But what's clearly happening is this data first strategy to some extent is paying dividends. And even a struggling business such as BCX is getting shrunk revenue significantly. I think the revenue down more than 6%, still managed to increase operating profit by shifting away from that sort of software and hardware vending business and more to the annuity-based service business, IT services business. So the strategy seems to be paying off, and even something like mobile, which they were trying to sell before, which a lot of analysts said had no place inside of such a small player in the South African market, they're seeing significant upside by leveraging their existing infrastructure. And of course, everybody loves the open surf story. So looks like decent execution, but we'll wait for results to get a bit more color.
Yeah, all right. Well, talking about color, Pan African Resources yellow metal, not that shiny. They did give us an interim trading update today, saying that they expect headline earnings per share to soften by as much as 49%. We did see that stock plunging by almost 7% at some point. Not really sure where it ended, but seeming that there were goals scored against the results. Were these own goals, considering where the gold price is that really should be providing an advantage?
Okay, so let's start off with this share is up more than 100% over the
Okay,
last year. So
context.
from that perspective, this is a tiny correction, despite a 40% reduction in headline earnings.
Okay.
So two issues. They're a low cost gold producer, and they produce significantly less gold in this period. I think 18% less than the previous period. One must point out that they had sort of scheduled maintenance and two significant projects coming up now, which should be at full production as of the first of this month. So H2 should see a significant volume uptick. And secondly, that hedge, which you alluded to. So when gold miners go in, forward hedge the cost of their, the revenue that they're going to receive from what they produce. You've always got to wonder. In hindsight, it looks like silly speculation. If it worked out, they would have looked like geniuses. But
Yeah.
there's sort of a history. Anglo Gold have gone through this and had to pay a fortune to get out of their hedge. Ultimately, it doesn't look like that model where you hedge your forward production and then massively, focus on operational underlying efficiency. The gold miners don't seem to execute well. On the bright side, the loss of those contracts have now expired. So at least for 5 months of the remaining financial year, they will be selling at this very elevated spot price,
Okay.
which means significant margin expansion for H2. But that should have been in the price already. This
Okay.
remains a reasonably, sort of disappointing relative to results, but overall, it's still been a phenomenal run. This thing is up from 4 Rand to 917 over the
Ooh.
last 12 months.
All right. Well, Cobus, let's get to your stock pick for today. What are you picking?
A little bit more boring than Trump tariffs and gold stocks, I guess, but I'm going for Reinet.
Okay.
So, I mean, I've hopped on about the discount to NAV. More recently, we've seen them finally exiting those tobacco assets and getting it off at a very good price relative to what you would expect for a size of that holding. They are most likely going to retain that cash or return it in the form of a buyback, but I'd say much more likely to reinvest that into the existing portfolio. We track the discounts, and it's tracking very widely at around 38%. And I think more significant news relative to all the other information which we have had is there is this persistent seller in the market that seems to be putting an overhang on that. And last week, the PIC released a statement saying that they will move below this 15% threshold.
Yes.
On the JSE, whenever a significant investor moves over a 5% or a multiple thereof, they have to put out a SENS announcement. And now it's clear that the PIC are in fact exiting a portion of their Reinet shares, and that is on all likelihood was what has been driving this wide discount. And almost,
Okay.
from an investor perspective, once you know the reason why a share price is under pressure, it almost gives you that security. And now I can double down on what I believe is a wide valuation disparity and say, this is a high conviction long for me. I would like to buy the share at this level. And at a 38% discount, that's very wide relative to historical for the stock. And it's an attractive entry point.
I also saw that today that MNG has increased its stake where it now has, voting right, which represents more than 5%. So that's going to be quite interesting to see those shareholder movements. Thank you so much for your time, Cobus. That was Cobus Potgieter from Southern Cross Capital.